and all that's good.
Yes, it is. Thanks for telling the world that we're going to be live on Instagram too, Joe. But welcome everyone to the Tesla Beat number 93. What a big week. Not only do we have the Q1 delivery numbers, we also have what is the impact on all of these tariffs, along with a bunch of other news that came out this week. So we're going to get you caught up. The other thing I wanted to mention is we have a special guest, the Jeff Lutz. How's it going, Jeff?
Been talking about a few things this week. How are you?
We're doing good. How is everyone? How's Hans, Brian, Joe? How are you guys doing?
So far, so good. Let's find out what the news is, and then we'll decide.
All right. Well, let's get into it. So we always take a look back at the stock. This week it dipped a lot more. Partially, it actually, funny enough, it wasn't based off the delivery numbers, because the delivery numbers came out. It dipped after hours. Then Elon supposedly coming out of Doge sooner than people had expected. That shot it up like 5%. But what brought it down this week was actually the tariff stuff that has been happening. So down 36%. Again, we're going to get into some of that stuff. But Joe, I'll pass. What happened on, what was it, Wednesday? Here's to you, man.
Yeah, it was Wednesday was a crazy day. Looks like the crazy thing is I think the world was expecting these numbers, which weren't that great, but just for context, nobody's doing these numbers for EV sales in a quarter. So like even though these are down like just a few percent for Tesla, the context should be noted that nobody is even touching any of these type of numbers. People wish they had these type of delivery numbers and production numbers out of their EVs, but still it's bad. It's bad for Tesla.
It's catastrophic. I did want to point out, I've seen a lot of people saying, if there wasn't a demand problem, why did they produce more than they sold? And the answer is because they've been drawing down the inventory in anticipation of the refresh. Other manufacturers will have 3 months, 6 months, a year of inventory sitting on the lots just waiting. So when they're down for retooling, you don't see it. Well, Tesla's Model Y refresh is so refreshing that the old one simply wouldn't sell once the new one's out. You can't do that, where with a 25 Accord versus a 24 Accord, even if it is their big model changeover, no one would really care. People would still be happy to buy the old one with minimal discounts, if any. So you have to restock. As long as Tesla's still running the least days of inventory of any of the major manufacturers outside of China, we don't get to see their numbers quite the same way, then it is perfectly understandable. And again, I just say, flip the script. If everybody was just in love with Elon right now, think how many more Model Ys they would have sold during the quarter. The answer is almost no more, because there were no more, because you can't sell something that has not been built.
Jeez, mic drop, man. Hans or Jeff, you guys want to weigh in on this quarter?
Yeah, I mean, I think that was a great summary from Brian and Joe. I mean, obviously BYD's EV business is growing and doing well in China, and they probably, I believe pure EVs, they're definitely doing well. But remember, their average transaction price is a fraction, literally less than half of what Tesla sells at. But in terms of, Brian summarized it in terms of, you can't sell what you don't have. If everybody in the world loved the product, wanted the product, they couldn't have it, because Tesla started the quarter with about 12 days of inventory, which is, in supply chain terms, it's probably below their stock out levels. So basically, as you go into stores, there wouldn't be vehicles for you to buy in several stores. Some stores there would be vehicles available for sale. And when you're at stock out levels, and then you take your supply chain down for 3 to 4 weeks, you're gonna be void of product, and that's the situation that they were in. And so if you take their prior quarter run rates of 3 and Y were 435 to 445,000 production. You take that several weeks of downtime and you lop off, it's about 30K a week of production of Model Y, and you lop that off, you get, the production levels of what we got about 100K lower. And so it all makes sense. I think the key is, and then they ended the quarter. And when you're ramping a new product, you don't slow down at the end of a quarter to clear the lines and get your inventory lower. You just keep going because you've got to get that product up to its peak rate. So March 29th, March 30th, March 31st, the factory's still cranking. There's no shutdowns. They have to keep going, Berlin, Shanghai, and in the US. So you'll see a little bit of a gap there of them building up some units, but those are all getting, delivered here in the next couple of weeks. So I think what we need to hear from the company in the earnings call is what none of us know, which is what's the order inflow rate that they're seeing? Are they seeing any impact of it? Because, there could be some brand damage, could be some number greater than zero. But, as Brian and others have said, the highest order bit in this conversation is, did you have product or not available to sell? And the answer was no, until they started re-ramping the why. So that's where we're at right now. We need more information and hopefully a good Q2 ahead of us. We have a macro situation as well to talk to as well with tariffs. We'll get to that in a bit.
The only thing that I want to add briefly to what Jeff said is that we have had a little bit, just a nugget of commentary on the brand damage subject from Tesla management from Giga Berlin. And I would expect if Tesla is experiencing brand damage issues and order rate issues, Europe would probably be the primary place that would rear its head. And given that the chief there from Giga Berlin said that we aren't seeing any order inflow issues, that gives us a little bit of confidence. But of course, that doesn't apply to the whole company. That was at a point of time. Maybe things have changed since then. So not, definitive. And we definitely need to hear top level executive management speak to it on the earnings call. But we do have a little bit of a glimmer of hope there.
Even yesterday, I had a comment saying, well, you're ignoring that sales are down 90% in Germany. And I'm saying, right, that was February. You're ignoring that in March, those sales figures doubled. Where's the Tesla doubles in Germany headlines? They're not as sexy. They don't sell. They don't make sense. So you got to zoom out once in a while. These numbers were anticipated. I pegged production at 372, 420. It came in at 362, 5 something. I was within 10,000 on production. If I can see it, how is it that the Gene Munsters of the world are so surprised? Makes no sense.
Yeah, a lot of these numbers, I didn't have an exact number in my head. I think, to be honest, what I was listening to is people like everyone's shows that are on here, and I think Jeff was kind of raising the flag. And so for me, in my mind, like, it just made sense. We all knew that the production line had shut down for the Model Y. It was just more of like, I think with his insights of doing 28 to 30,000 units really just helps paint the picture, especially with the fact that you can't sell something that is not being produced. And, I think probably about maybe a week before the quarter ended, maybe 4 or 5 days before, you start hearing every state selling out of the inventory Model Y. And they had a decent amount that they went through. So good for them on getting it. But I think, just so many people have been hyped on, at least what you're seeing on social media is like, hey, Tesla takedown. There was this dude who made a whole video about Tesla sales tanking 72% in Australia. But it's like, what people don't realize is that, like, you look at a place like China and they're like, oh, you're just cherry picking. It became the best selling car in China in March when they had pretty much been shut down. Plus they had the Chinese New Year. And, to seeing that ramp, and then even Norway became the best selling car. So it's crazy how much it's able to flip once they're at full production. And so that's why I think that we all know that there's going to be some brand damage. It's just a matter of how much. And more importantly, like, the new people that are getting butts and seats that are getting into these cars, or people that are checking out these cars, will that offset it? But outside of all of that, I will say the one last thing I'll say is I had a buddy come over last night who got his brand new Model 3 on Monday. And it was, he went with the 15,000 miles, 24 months, and he's paying $350 with taxes. It's about $383. But just that deal for $299, if you got the only 10,000 per year, it's crazy. You cannot there's like probably not many other car auto deals out there where you can get for $299 get into a great car, and it's not even just an EV, just a great car that feels luxurious, that has a really that rides quiet, that has a great suspension. I mean, everything about the car is just great, and I think if people just come and check out and test drive the car and they look at that deal, they're going to be moving so many more. And again, we'll see what happens over these next couple months, but I think Tesla. I mean, we'll see how things go, but I think they're positioned to do really well this year, and we know new products will be coming out soon. Okay, Jeff, I'm going to kick this to you. Do you want to just, so we have about, let me know if you want me to revert to any of these slides specifically, but do you want to just kind of kick off what happened this week with the tariffs, and then we can go into what this means and then getting the panel's view.
Yeah, and there's a slide in here with some blue. I probably should have given to you these in order with the blue. Was there the chart with the blue bars on there? Did that make it? Maybe not.
No, I don't think so.
Okay, no worries. So here's what's happening. Tariffs are a difficult conversation to have. Quite frankly, there's not a lot of great knowledge out there. There's a lot actually involved in it. You have the actual tariffs themselves, and you have things that countries can do besides tariffs. They're called non-tariff barriers to basically make it difficult for you to do business in their countries. And when you add these two things together and you put everything together, it's kind of the starting point for what we're dealing with globally, which is the tariff and non-tariff barriers are much higher in other countries where the U.S. is trying to do business, and the U.S. is importing a lot of product from all over the world as a result. So we're a very rich nation, and we're doing a lot of importing. Now, what's happened over the last couple of months is you've had tariff negotiations with specific countries, and what it escalated to or culminated to on Wednesday was a broader rollout with all the countries. And there's a lot of, I think, criticism that can go multiple ways on this in terms of like how are the baseline rates calculated, by country. It doesn't, I think that process lacks significant credibility. But where there is credibility is there are very old, decade-old tariff barriers and barriers to doing business that the U.S. has to deal with at some point. So now you can question the method and what we're doing, but as it relates to Tesla, if we're able to put some of the charts back up, Tesla is actually in a fairly good situation. So on the left chart is just a kind of the major countries outside of Canada and Mexico. The U.S. levied very high tariff rates on these countries. Now there are exceptions or carve-outs for actually each of these countries, and they're not reflected in these numbers. And when you do a carve-out with some of the bigger things like semiconductor for Taiwan, it takes the number down significantly. But be that as it may, the tariffs that the U.S. have levied back are, these are very high. I think it's a starting point for a negotiation. That's my opinion. Let's see where this goes. But as it relates to Tesla, Tesla has built their supply chain over many years to basically localize their supply chain in the economic zones they do business in. And the summary of that chart, at least for the US, is right now from an auto perspective, there's final assembly tariffs on, and Tesla does all of their final assembly in the US. So they're relatively insulated. Now Canada has responded with a reciprocal tariff on the 25% auto. So there's obviously an issue to deal with there. And then potentially a month from now, there could be additional tariffs on auto parts as an import. And then there are tariffs going on next week. It's kind of confusing, but there will be other tariffs going on next week for those other partner countries, especially in Asia, where Tesla would do has some component suppliers there in Asia that they would import to the US. But in general, tariffs are not about number of parts, it's about the dollar value of those parts. And the dollar value of what Tesla imports is relatively low. It's fair to say that they're not unscathed, but it's really about the dollar value that they import. So lower complexity, lower dollar parts, not super cheap parts. There are some parts, like, for example, the AI4 computer is one, and some components within that. But in general and relative to other automakers, lower dollar value. So I think the way this plays out, at least right now in the interim, is Tesla actually has a bit of a pricing advantage relative to everybody else who sells cars in the US. That advantage has just grown a little bit as a result of this, and is, temporarily right now, the incentives are still on. From an EV perspective, there's still the federal tax credit, there's still the state tax credits, there's still the battery credit from the IRA for battery manufacturing in the US, and there's still ZEV credits. So I think the way this plays out, at least in the interim, is if Tesla has a bit better of a pricing advantage, and if others who are assembling outside of the US, if you look at the top 10 EVs sold in the US, 3 of the top 10 Tesla's number 1, 2, and 4, but the next 3 of those EVs are Model Y-like competitors, the Ford Mach-E, the Chevy Equinox, and the Hyundai Ioniq, and they're built outside of the US. They're built in Mexico and or South Korea. So those would get a 25% tariff, and their business cases would be in, they have a significant issue. So I think the way this plays out right now is there's obviously a lot of panic. There's obviously a lot of concern. I think some of it is warranted. These are very high tariff rates that the U.S. responded with. I think it was a surprise to the markets that it wasn't some more of a nominal number. I do think that this does come back to more of a lower nominal number end state, but I don't think it actually comes back to zero. So I don't think that there's a particular country you go and hide in if you want to continue importing. But I do think what we are seeing right now is the U.S. They do have a carve out in the USMCA for the supply chain work that we have set up in Mexico. It's debatable. It's going back and forth. It's really an unpredictable environment at this point, to be frank. But if you localize your supply chain in the economic zone that you're doing business and where your customers are, you are in the best position. And that is a multi-year thing to do. And Tesla has done that and executed well on it. I'll come up for air.
You could add the Blazer and the Prologue to that, also made in Mexico, also strong sellers, and
That's
also
right.
in the same
That's
form
right.
factor. It's yeah. Well, if there's one thing the market loves, it's chaos, and we've got that in spades.
Yeah.
It's there's a reason trade deals usually take years to negotiate rather than happen on a whim at a press conference. But hey, here we are.
I agree. I think you can the whole execute, and I've been writing articles about this. I've been posting on X. Like, the execution of this is definitely questionable, but the problem had to be approached. You can question how the approach is actually taken or occurred, but I would also say be careful too of what you're seeing on X and what you're reading, and also try to consult with some who have done some amount of trade or work in the space. Like, for example, this morning, just doing real-time news, right? China responded with 34% tariffs on product. I mean, I think what a lot of people understand the context, we import about $500 billion product from China. So we have a 54% tariff, and there's carve-outs in there, but it's roughly the tariff level we have right now. So that's for them, that's a $250 billion impact to that amount of trade coming in. And then we can debate who's obviously paying the tariff. They only import about 148 billion from us, and then they put a 34% tariff on. So you have a $250 billion impact versus a $48 billion impact. We import a lot of stuff. We buy a lot of stuff in this country. So we are in an advantaged position in all these negotiations. The question is what's the approach? What's the end game? How do we get there? Do you want to, again, burn the house down to, cook a steak? These are all the kind of appropriate questions. And I think they're very appropriate at this time. but this did get a bit out of hand in terms of the imbalance. It's more of the approach of how we deal with it. But again, I think for Tesla, I think we spoke about the vehicle side. On the Megapack side, there is exposure. So we import the LFP cells. I think I put the article in here. I don't know if it made it in, but we do import LFP cells for Megapacks in California. And Brian, just correct me if I'm wrong if you've got other additional information on that. But right now we're at about a 65% tariff level on lithium ion, because there were existing tariff levels before that that were in place, and then now the 54% goes on top of that. That 65% level on lithium ion from China and the cello, it's going to grow to about 83% by the end of the year, January 2026. So for Tesla, from an execution perspective, I would have hoped they would have brought in some inventory, prior to these bigger tariffs going on, and then they'd have more of a runway to their own domestic LFP battery cell solution for Megapacks in the United States. That's what we want to see, and we'd also want to see Tesla obviously further this the dry electrode 4680 as well. So get their own battery solutions localized, low capex dollars, high capex efficiency. That's what you really want to see out of Tesla's situation. So I think the summary for Tesla is fairly insulated on the vehicle side, not unscathed. The Megapack side in the U.S., though, there is risk, and that would be a really appropriate question for the earnings call.
And I would point out to viewers that we're not here to debate the merits of the trade war. We're here to discuss Tesla's place, Tesla's ability to weather the storm. You are correct about the LFPs coming exclusively from China. Tesla has purchased LFP equipment from CATL. It has been installed at Giga Nevada. We do not yet know if it is operational or how soon it will be or what the actual costs will be. They will certainly be cheaper to build there than to import and pay the tariff on. But we're talking 10 gigawatt hours of deployment. That is what, 120 to 180,000 cars worth, depending on the size of the pack you put in. If you're talking 55 kilowatt hour standard range LFP Model 3s, that's 182,000 of them. So it would be a whole lot of batteries. Typically, you would like to see a protectionist policy that ramps in conjunction with local capacity, so that you're not stuck with just a big gap. But Tesla is so far weathering it, and that is, I think, the whole point that I'm here to discuss is that because I famously do not have a crystal ball. I should get.
I thought you did, man. That's why I brought you here.
No, it's a magic 8-ball, and it just keeps saying 2 weeks.
Brian, you're right. That was the approach, was for these lithium ion tariffs to escalate over time. And a tariff schedule is the right approach in these situations where you want to remove your dependency from a country and you want to build the capability locally. The same thing could be had for these auto tariffs. If they go to the component level, it's honestly disastrous for a GM, a Stellantis, and even Ford. And what you would want to do is you'd want to build a schedule like, okay, maybe the tariffs are 5% today, but then here you have this duration of time based on commodity to build that capability up in the US. And it's not just building factories and transferring equipment. Remember, the cost structure to build some of these things in Mexico at the $2 to $10 an hour labor rate, you wouldn't do the same number of labor content and operations in Mexico. You wouldn't bring it to the US at $60 to $70 hour, fully loaded labor rates. Your unit economics would explode. So it's not that they just have to transfer factories and transfer existing work from Mexico. These companies actually need to transform how they design product and how they manufacture it to be able to be localized in the US. And this is the hard work that Tesla's actually already done, and they continue to do. It's never done. Your work's never done on cost.
One question that I have to you guys while we're on this topic, Han, sorry, were you going to say something?
I was just going to say that work specifically is the impetus behind the Optimus humanoid robot project. I guarantee you how this project was birthed, but that project takes time to develop and get rolled out. And right now we are definitely in an in-between season of trying to figure out how do we rebalance all of this trade. And if we can figure this out over the next couple of years, then we're going to etch a sketch the whole playing field and start over from scratch again, and it's going to be really, really crazy.
Yeah, this is why my base case is that the opening salvo tariffs, including the ones with Mexico and Canada, cannot be end state, because you'll kill the patient while you're during the operation, especially like the auto industry. There's 3 million jobs in the US connected to the auto industry. So you're going to accelerate the demise of several companies, and you're going to have one of two things happen. It's not like everybody's just going to go buy Teslas, by the way. Tesla will be supply limited at some point. So you could have one of these situations occur, like where you had both a macro slowdown in the great financial crisis, and you had a micro in the US auto industry as well. The US auto industry drew down 60% in 2009 in the great financial crisis, and you wouldn't want that. It was running at 16 million units a year, and it went down to 10 million units, and you wouldn't want that. So you wouldn't have inflation if that occurs, because people are buying less product, but you're making less cars, and the whole industry shrinks. So you wouldn't want that. So that's why I think that I'm hoping that end state, I think there is going to be a tariff barrier to draw manufacturing back to the US. And I think they do want this permanent quote unquote income to the country, but they can't be as high as they are right now, because the companies actually can't execute to a schedule to migrate product here fast enough. And I don't really want to get into the labor issues. I don't want to get into the technical and tooling issues involved. We have not been building a nation of tool and die makers over the last 2 decades. We have not been building some of this manufacturing talent up. We've been focused in more of a service engineering, software economy, not a manufacturing economy. So I'm not against it, but I'm more of like, let's do it on a proper schedule.
Yeah. So one question I have to the panel is, specifically, I mean, we saw some of these charts, right? And obviously not this one. Just like, percent made in the US, we saw, how the vehicle assembly, where it's the tariff impact. How do you think this is going to impact the competition, legacy auto? I mean, maybe even Lucid and Rivian. How are you guys thinking about that? Not all at once.
Yeah, I'm less worried about, Rivian and Lucid, because they do localize a lot. And while they don't localize everything, they do localize the expensive, important parts. It's really Ford and GM who are showing some really strong EV numbers that I'm most worried about, because it's not going to kill them, but it will kill their electrification, because they just made these huge investments based on what they believed was going to be a long-term trade deal, and they really got the short end of, if there even is a stick.
Yeah, I think what Brian is talking about is probably more of the impetus of the entire situation, like what Jeff laid out. You're looking at a situation where it's not really about like the end game. It's like, okay, so what happens next, and how that's played out next, right? Because like Jeff said, not everybody's going to go buy Teslas, all because Teslas has this locally manufactured, and as we know, for EVs, nobody else is even matching the production numbers. So even if Lucid and Rivian got the bulk of these numbers, they couldn't meet the demand. And already we see like Tesla even has a problem meeting the demand, and they're like producing the most out of everybody. So even locally here, when the Model Y was cut off, just up until like a week ago, I mean, like there was employees. I was at the Stockton Center, and there was employees that were trying to buy the old Model Y, and they couldn't because they were sold out everywhere. And so like, this isn't going to be like, oh, Tesla's just going to get all the money and all the sales, and so is Lucid and Rivian. And I mean, it's not going to happen like that. You're what Jeff and Brian are talking about is like a really good idea, and hopefully like the president and his team has thought about that, like just kind of like mapping out a ladder effect instead of like just like, you know, a blunt instrument effect. But I mean, we'll see how it all plays out. It's a good question, John, but the real thing is going to be like the production. And even if it all became local, nobody can meet the production, and not everybody's going to buy Teslas. So
And
it's a big.
yeah, if you were to look at, let's say they said, hey, Rivian, Lucid, we're going to give you guys a 100% carve out. You don't pay tariffs on any of your parts over and above what was already there. Would their sales boom? I'm going to argue probably not.
Yeah, and actually, there's data. You know, there's Rivian inventory data. So Rivian did not come into the quarter with low inventory, and I think their sales were down about 36% year on year. So you know, there's something, you know, to that with the consumer. You know, over $70,000 or $80,000 is, you know, at least in the U.S. There's definitely something going on there. We saw it with the S, the X, and the Cybertruck as well in some of the Tesla numbers. So yeah, there's not a. And I know the Lucid numbers were a bit of a beat. But we're talking, you know, 3,000 cars. So yeah, in general, you know, it's not like if they were just unencumbered that their sales would go through the roof. But yeah, John, I mean, to answer your question, if you look at the rest of the auto industry, they're hit pretty hard with these tariffs. You're going to have the way this is happening right now is these companies are in, you know, all day. They have tariff war rooms every day inside of these companies. And what they're doing is they're trying to figure out product, right? You know, kill, keep going, transfer. And then they're figuring out like is there new products that they can accelerate, and do they hit the right price point? And then they're doing the tariff. They're doing the current state and what they believe end state tariff overlay cost structure is on all of their products. And they're trying to figure out what they kill. Because remember, killing something early will help you from a cash burn perspective. The worst thing you could do as a company is you have these very long inventory cycles, and you're plowing inventory, and you're doing component orders for a product that's not going to sell because the margins are going to vaporize.
Yeah, no, I think that's I think that's helpful, and we'll see. But yeah, I mean, even I was actually surprised. I mean, again, you've seen some of these videos where people are, let's say, selling their Teslas, but I was surprised Rivian's numbers weren't better, because I just looked at them. I think they delivered what was it, like 86. They delivered 8,640, and then last year they delivered almost 14,000, 13,000. Sorry. Yeah, they delivered 13,600. So yeah, that's a pretty big drop. I mean, they're not going anywhere. So at least from where that's headed right now.
Yeah.
Yeah.
And then if you look at the tariff implications that Brian brought up, the Chevy Blazer and then the Equinox, so GM, you know, they sold more EVs this quarter, but you know, it's 31,000 EVs they sold. Half of them are the Equinox and the Blazer. And with a 25% tariff being final assembled in Mexico, I mean, they're already running at negative EBIT, or I think they may have said that they may have made positive variable gross margin. They didn't break it out on a vehicle level, nor should they have to. But the point is these companies have very low hardware margins, ICE, hybrid, EV, and even lower on the EV side. So when you put a 25% tariff on, it really changes the portfolio of what these companies can still work on and deliver. And finally, it's worth, in any of these conversations where they're talking about deliveries and looking at year on year, you have to look at production and you have to look at inventory. You have to look at all those three things together. I looked up the R1T inventory. It was over 100 days of inventory. So it's not like there's an availability problem. There's production well ahead of that 100 unit delivery. So I don't know what's going on there, but it's important to look at all three of those things together, because you can get really confused. That's why you saw the January, February sales, saga on Tesla, but there wasn't inventory of vehicles available. So you really have to look at all three of those together.
Definitely. And I know Jeff, you drop. Thank you, Jeff. Give Jeff a follow, the Jeff Lutz.
Yeah, good seeing all of you. Have a good rest of your morning and great weekend.
Thanks, Jeff.
Take care all. Bye.
All right, Joe, I'll pass China to you.
Yeah. Yeah, I've been Chinese for a long time. So this is pretty cool. This is essentially what we're talking about is like, yeah, Tesla can outsell everybody, and their production numbers are crushing it. But then what? You know what I mean? But then what? So best selling EVs in 2024, and of course the news articles would have you believe otherwise, but Tesla is crushing it. They're just crushing it a little less than they normally would, but they're still crushing it. And so the media would have you believe differently, but yeah, no, it's okay. They're going to be okay so far.
There are plenty of
And you do.
markets where go ahead, Hans, you go first.
I was just going to say, you do have to look forward. Like the Model Y was already the best selling car, and the changes that were just made, while they do introduce a little bit of short term pain while we change over, you end up with a car that you can sell for at least as much, if not more, and it costs you less to make, and you can make them faster. So, like, I think it's kind of a worthwhile trade off to say, I'm going to lose a little bit of production for a few weeks, and then once we get our ramp all the way back up, that we're going to be making more money as a company, more cars, delivering more happiness and joy to more people. Like, this is what business is all about.
There are countries where we're seeing Tesla having record sales, the UK being one. Nobody's going to buy one of these cars. I've seen that comment so many times. I don't know who this no one you speak of is, but it's not consumers. Because when you go in on a Saturday to protest the evil Tesla, don't you see people rolling out in brand new cars like the whole time you're there? Because I'm going to tell you, you do. It is a busy place. And I've even had viewers say, well, I went to pick up mine on a Thursday afternoon and it was busy. So the sales are real. They're really happening. Do we know what sales will be when the final we can't predict 6 months out, because even if we don't know what the cost of the car will be in 6 months, it may be higher than it is today. Hopefully it can be some of the savings introduced from the new Model Y can reduce the impact of the parts of it that are subject to tariff, but we'll have to wait and see. It's going to be interesting, but the idea that the growth story is over is not supported by data.
Yeah, and we also have to look at context as everything, right? This is over 300,000 vehicles. Nobody is doing those type of numbers except BYD, and they're selling everything under the sun at margins that aren't really all that great, and they can't even keep up. So, like, to say that, Tesla could have sold 400,000 vehicles and they only sold 360,000, like, it's not the end of the world. You know what I mean? Like, to people really got to put that in context. That's 300,000 more people that bought Teslas than anybody else, and it's crazy. The second place is like so far behind it. It's not even. I mean, we have a slide for that, but like it's wild.
Well, people are so annoyed and angry that they're dumping their Cybertrucks. Why, just yesterday I went on Auto Trader and did a search to find the cheapest Cybertruck available. And would you believe the cheapest Cybertruck available is above list price? It is over 80,000 was the cheapest one I could find. So that's how angry and frustrated people are, because here's what's going on is dealers are getting these cars and they're putting them on their lots, and they're putting them on their lots above list price because frankly, I don't want to sell it. I want to leave it there so people come in and look at my other cars and buy those. So it is a marketing tool. And these car dealers will probably lose a few bucks on their sale because they're going to sit on them for too long. But good. I mean, who's going to pay 83,000 for a used truck when you can get a new one for 72.5 with the credit? So, hey, whatever makes you guys happy.
Oh, I thought you were going to say something, Hans.
I can. Yeah. So one of the things also to just remember is that now that we have got the Model Y ramp, I mean, we're not all the way completed with it, but we're getting close. That means that Tesla can move all of its very valuable engineering and management time and energy to releasing whatever these next generation of vehicles are, which is going to lower ASPs. increase volumes. And that's not even to mention the June Cybercab rollout. And that's the big difference between BYD and Tesla, as has been mentioned already here, that BYD sells at those lower price points, and so it makes the volume game a little bit easier for them. And oh, wait a second, now they're going to have to face competition in some of those segments that they've never had to face before from a company that makes the best products on the market, period, bar none.
But in China, nobody wants a Tesla anymore in China. Well, really, because we're looking at the production and sales figures, and it appears that that's untrue. Well, it doesn't have all the tech. Yeah, maybe it's missing some weird bells and whistles, but at the end of the day, you want a good product, and Tesla has established its brand, its reputation in China as making a good product. I've driven the Model 3 that was built in Shanghai. I've had a chance to get up close and personal with the Model Y from China. They're fantastic cars. They're everything you would expect a Tesla to be, except honestly, maybe a little bit better. And that is recognized. And while you can say, yeah, but it's an old people car, or it's a conservative, old fashioned person car in China, that's great. I don't know if you know, but there's like 1 billion Chinese buyers out there. A lot of them want a car. And so any market segment will have buyers.
Yeah, and one thing I was going to say too, and again, I'm taking this from Jeff Lutz in his show. I think it was on Wednesday, but he did talk about how Tesla in this case prioritized free cash flow as far as like heading into the actual quarter versus using insane high utilization rates on their production line to overproduce inventory, because they actually had low inventory walking into the quarter. So instead of spending another $1 billion to, let's say, build another 20,000-30,000 Model Ys, instead they balance that with just making sure that they sell out. And so that's just something to an interesting note there, that maybe they could have pumped these numbers up a little bit and spent more money and allowed an impact potentially to their margin. But I think for them, they saw these headwinds a little bit, and so they didn't stock up even like running into this because of the inventory levels that he was mentioning. So just interesting insights there.
Yeah, and I'll just add briefly to that we talk a lot about the Osborne effect when we're bringing in new products, and I would just say that the Tesla's management of the Osborne effect for the Model Y over this cycle was masterful. Like, they were able to eliminate all of the old inventory of the Model Y, switch over to the new. It's not that, like we said, we lost production, so sales numbers are down, production numbers are down. But there were people who knew that the new Model Y was out who are still buying the old Model Y. And why? Well, because they knew how to price it attractively and make those vehicles disappear, and they had the cash on hand to be able to do all of that. I think that I'm just very impressed with Tesla's management in their execution this quarter in doing this, very difficult transition at a time when literally, I think that anyone who is super interested in buying a Tesla Model Y knew for quite a while that this thing was coming out very soon. And so that does make some of these transitions difficult. And I think they did a great job of walking through all of that.
Well, we knew they could navigate storms because we seen it for the whole COVID thing, while everybody else was like flailing about, and Tesla was still producing numbers, and we see that now with this whole situation. Tesla and their team can navigate these storms better than anybody else. I don't think that's in question. The question is going to be like the impact on everybody along with Tesla. You know what I mean? Like, yeah, Tesla's going to be able to sell, but even if they drop to like 200,000 units a quarter, you know what that means for everybody else. They're going to be like, where Rivian's producing 8,000, you're looking at like maybe 2,000 vehicles. And that's, I mean, the economic effect of that is kind of big. And you're looking at staffing issues at that point, and like how you can maintain these staffing levels. I mean, there's a whole bigger topic of conversation that happens after that. I don't think it's a question of what Tesla can manage. It's a question of like the impact of everybody else and how they're going to be able to deal with the fallout. So yeah, I think Tesla's going to be okay for the most part. I mean, they do layoffs constantly, and I talk to people who recently worked, and they're working on and off like every few months. You know what I mean? Like where Tesla will do like a layoff, and they'll come back, and they know that they're going to be back employed in like 4 months, and it's like those are the things that you don't really hear about in the media, but it happens, and Tesla's been very good at managing that.
So I think, just to level set too on battery electric vehicles, this is kind of another chart just on where Tesla ended the year. And again, you can see that they beat out BYD by about 25,000 vehicles. And again, you can just see after that, I mean, everyone's doing like half. So it's, I think Tesla continues to push forward, and we'll see what happens. Like I said, I think these next couple of, not only are we going to be looking forward to this ramp, but I think two big things that are going to be happening this quarter is potentially a new product reveal along with FSD unsupervised. So it's interesting how it's kind of funny how all of this stuff is like turning out, because we're in this in-between stage where Tesla's going from a car company into an AI robotics company. And so these things like FSD unsupervised and the robot, they're going to become even more important and less so on them delivering an insane amount of cars. Obviously, that's the biggest metric that they're measured by right now. And again, you talk about all their other businesses like storage and battery and solar. And so, yeah, it's just, I think, interesting chart there.
Yeah, when people talk about like how bad Tesla's doing, I just think about this, and I'm just like, man, context is everything, man. Like that's why I put that they're failing so successfully. Like it's like a weird.
They're also satisfied. Tell us about that, Joe.
So this is another UK chart. Number 1 in driver satisfaction. So that's pretty cool. Tesla just raced past competition to become the UK's highest rated car brand. Not gas, not gears, just pure behind the wheel. The numbers prove it. Tesla is 89.41%. The nearest is Lexus and Porsche, which is doing okay. Not bad, but they're not at almost 90%.
Lexus used to be a really fantastic brand, and I was still under the impression that it was. I had a chance to drive one, I don't know, 5-10 years ago, and I couldn't believe how cheap it had gotten. For that matter, the Camry used to be a fantastic car, and it feels like a rental. It feels cheap. So I don't know what's going on with Toyota, but maybe they should. If you're not going to do better than the Buzz Forks, at least make your gas cars worth a darn.
Yeah, that chart is very telling because Jaguar's on there at like over 84%, which is very interesting because
I think the people surveyed returned them before the lease is up.
that's probably true. Yeah.
I did see an ad on Instagram. If you own a Jaguar I-Pace, there's this. Well, I mean, you see this probably for every company, but there's a lot of, I think, attorneys coming after Jaguar for issues that they've been having with the battery on stuff. Again, I don't know why I've been seeing those, but
yeah,
I saw several of them.
But I mean, it's good to know that this is like all vehicles. This isn't just electric. This is like Tesla at the top of like satisfaction for all vehicles. These are gas and EVs and hybrids and everything, and Tesla is still at the top of that list in the UK. So that's saying something.
So as we know, Tesla is in a transition mode of becoming a robotics company as well. They already are. I mean, if you think of their cars are robots driving themselves. But Elon just released a video, accurate actuators accelerate automation. And an employee mentioned that this is our latest walk: straight knees, smoother heel to toe gait, and arms sway, just chilling around, entirely trained in simulation with real life. So, yeah, I think it's just It is really,
Reinforcement learning.
yeah. Sorry, go ahead.
The RL is reinforcement learning.
Yeah.
Okay. I was just thinking real life, but yeah. So, yeah, no, I think it's really incredible just to see them put out these videos, and again, this is just walking. I'm gonna assume Austin, maybe
Palo
Fremont.
Alto.
Yeah. Oh, that's right. That's right.
And
All
that
right.
was not the most recent Optimus. That's the Optimus from 2 versions ago. People looking at it going, "Oh my gosh, if this is it, they're so far behind." No serious bot company is showing you their latest greatest right now because the competition is too intense. This is old tech. We're just willing to tell you about it now.
Yeah, it's kind of, man, when you think about like how this started and when it started and where they are in terms of like the competition, it's freaking mind blowing, man. They just hopped into this and right out of the gate, like a year after it made that clunky, you know what I mean, like VHS version walk out on stage, like it's been like crazy ever since. Like
And the dancing robot, the fake dancing one.
dude, yeah, it's just, man, holy cow. Like their rate of improvement has just been like crazy unmatched. But like Brian says, there's a lot of competition. Everybody's making robots. This is like cell phone industry all over again. Like
Oh, yeah.
everybody has something. So
And AI, everyone's doing AI. It's
Yeah.
just it's a trigger word for stock, pretty much.
When I was at CES, Goodyear had AI in their tires, and I was like, "Oh, I've got to get an interview about this nonsense."
Mhm.
And yeah, it was very exciting.
Yeah. The thing that I'll say briefly on robots is that the competition is, to y'all's point, heating up, and especially, we see a ton of demos out of China that are very, very, very impressive. Now, obviously, prototypes are easy, production is hard. Demo videos for marketing are easy, but making reliable products is hard. So it's hard to know what to take seriously there. But you have to acknowledge the fact that the demos that Tesla's willing to show to us today are not as impressive as some of the demos that we've seen from other people. Now, I think that Tesla doesn't care about that fact specifically because Joe's 100% right. Not Joe, Brian is 100% right that no one is showing us their latest and greatest stuff because everyone is copying everything, and there's no not a moat, but yeah, there's just so much energy and activity going into the sector, so many players, so much money, and it's such an important field, both for companies individually and business opportunities, but also at the nation state level for national security and industrial policy and a whole number of factors. And so because of all that, they're having to be a little bit more hush hush. And I am highly, highly, highly confident that there's incredible things that are happening in Tesla with the Optimus project, and the silence really around this is deafening. And even with this one little video that we're seeing, like that's not really what is actually happening. That's at the cutting edge with that project, and I'm excited for some of those things that we think are probably happening to actually become public when Tesla's ready.
yeah, no, good call out. Here we go. We are at that point of the show where we do this upbeat thing. So I'm gonna throw these topics to you guys. I already know the first one. So this is going to to Hans. Wait, where'd he go?
He
Well
mentioned in
played.
the chat that he had a hard out at 8:55.
Well
Oh,
played,
yeah, no
Hans.
worries.
All right, so John, what did you think about this?
I'm not surprised. Again, I think I remember for years leading into Elon or the Cybertruck being released that they had kind of joked that it's a boat. So seeing this, I mean, obviously you're way above probably, what you're supposed to do. But I mean, honestly, this is what EVs are known for. You don't have an issue with the engine shutting down because everything is completely sealed, the battery, everything, versus an engine. Once the water would overtake a certain portion of it, it can no longer operate. So
the snorkels.
Yeah, this person literally, shout out to them for a viral video. Would not suggest doing it, but I was not surprised to see the results, which essentially it came out no issues. Again, who knows what the issues are now, but yeah, they won't be able to take this into service and say that
this was interesting to see, especially from the jet ski perspective and back. Like I don't think the truck would have any problem doing this. The problem was footing and it being able to grip where it could, do this at, because yeah, like you say, once you enter wade mode, yeah, of course you can do this. Of course, this exceeds that limit, but yeah, it was pretty crazy video. I would have thought Florida would have been the one to do something like this first. But Texas. Brian, flat earthers, are they upset?
That's what they do. They get upset. Hey, yeah, I saw a lunar eclipse a while back. I was disappointed it wasn't a big flat disc shaped Earth going across, casting the shadow. Look, the world is round. Somehow humans have never done the polar orbit before. They've done all the other orbits, and we've sent satellites into polar orbit, but this is the first time that we've done this one, and it just shakes me to my very core. I this whole time thought the Earth was an oblate spheroid. Apparently it is just a ball.
Yeah, it's upsetting facts. So I thought this was pretty cool because this is a drunk driver, and people kind of negate the fact of how safe Teslas are. So this is a Cybertruck that was hit by a drunk driver, like T-boned. And anybody who knows about T-bone accidents, like, it usually splits the vehicle in half, and very rare will you have a survivor of a hard T-bone event from a drunk driver. So I thought that was great, and it's good for them to point this out. Of course, their family's okay and everything, but man, Teslas are just safe vehicles.
And that is a hard hit.
That is a hard hit. John.
All right, Redwood Materials, welcome to San Francisco. Expands into San Francisco. The battery recycling giant is opening up a 15,000 square foot R&D center in San Francisco's design district. Well, I'm certainly excited. I'm happy that they're building deeper roots even in the Bay Area, because this company is headquartered in the Reno area, outside of there. And the fact that they're going to be doing some R&D in the Bay Area, it's exciting. And also too, just to see that batteries will continue to become 100% recyclable, and so this company's success will really continue to help with sustainability. So happy about that. A little like I said, I mean, I know that they're in Nevada, so I in some ways, for the talent, I'm not surprised that they're coming here, but also too, just given the fact that they are opening this here, was a little surprising.
Pretty cool.
It's an R&D center. You got to go where the tech minds are.
Yeah, no, I agree.
100%.
So Tesla has a little March update. They got all kinds of things happening. This has been pretty cool to witness. Brian, you want to touch on any of this?
Well, there's some big news here with especially the Middle East. Saudi Arabia is now going to have Teslas. Saudi Arabia, I thought they were going to buy 100,000 Lucids. That never made sense. That was ridiculous. That would make them more common than any taxi that's ever been in the country. And rich people want special things. They want their special toys. They want to feel like they're special. And something that's one of 100,000 in a car that only has 500,000 cars is not going to do it. So yeah, the idea that it's rolling out in more places is great. By the way, still hasn't really rolled out in Brazil. Maybe that's going to come soon as well. I think that would be another interesting market to get into. There are still new horizons to conquer.
That's true. They have a lot of demand levers to pull in a lot of markets that they are not even in.
All right, guys, we're wrapping up another insane week. So as we know, July 26th is the X Takeover. If you are an EV enthusiast, space enthusiast, we would love to have you in the Bay Area, July 26th. There will be a lot of things going on Friday the 25th as well. So come and join us. We would love to see you. Go to xtakeover.com. We have some great speakers like Brian, who's one of our regular co-hosts here, along with Sandy Monroe, Lars Morovi, who's the SVP of Vehicle Engineering, Steve Jurvenson, who is a longtime investor, especially for Elon's companies, and Gali Farzad. Again, I could go on for days. Just a great lineup of speakers. So go to xtakeover.com. We will hopefully see you in July. And please, again, patronize.
I did want to say thanks to everybody who came out to the Chattanooga Charge last weekend. Yeah. If you guys haven't been to one of these events, you need to get out to one, and the X Takeover is a great opportunity to do it because it's the biggest of them all.
Definitely. And I think please make sure to give people like Brian a follow. Go subscribe to his channel, support him. Joe, go and follow him on X or his Instagram handles or Facebook. We will see you guys all next week, and we will continue to keep you updated. And have a great week, everyone.